Okay, go ahead.
Okay, let's do it. Okay, thanks, Errol. Okay, hello everybody. So it's a good morning on my side of the world in Austin, Texas. Thank you all for joining me from all different countries and parts of the world. I see a lot of familiar names to me on the attendees list that are watching the webinar. Thank you for joining us once again. Uh, And for those of you who are new to the webinar, my name is Ilan Asbel. I am currently the CEO at AutoChartist. I was actually one of the original founders of the company. I've been in financial markets for over 15 years. I started off in my kind of early 20s while I was still studying and working, and then subsequently later on in my career I moved into financial markets and been in it for like 15 years or so. I do trade quite a bit myself, so I hope to pass on some of my experiences. And specifically in today's conversation that we're having, it's not really about how to use AutoChartist. We cover that on numerous occasions in other webinars in terms of where to click and what buttons to push. Today's webinar is about a certain specific trading strategies, and today we're talking about how to set what I call market appropriate stop losses and take profits. And today's presentation is not going to be a very long one because it's quite a very niche topic, but I hope it's going to be full of very important information for you. So I'm not going to ask you any polls today because I'm sure that most of you are, as in previous polls, either forex traders or futures traders with a little bit of stocks thrown in between there. So I'll just focus on one or two examples within the AutoChartist platform and use MetaTrader to show you some more specific trading details. But you can use the same information on any trading platform that you use, whether it's a stock trading platform or a forex trading platform or a futures trading platform. So let's get going. So the first thing, and I almost say this almost every webinar, is that I'm involved in a dispute resolution committee called the Financial Commission. It's a non-regulated, non-governmental body, self-regulating body, and it tries to help brokers and retail customers resolve disputes about trades. And I can tell you that I'm almost be bold as to say almost 100% of the disputes that come in into the dispute resolution committee are based on traders telling them that complaining to the broker that they were stopped out of their position incorrectly at an incorrect price. And sometimes people have a valid case, but in many situations we find that people have actually set inappropriate stop loss or take profit levels when they're trading, and they get knocked out of the market really quickly. And what they end up doing is they end up blaming the broker for chasing their level, and because no one really wants to take the blame for anything, right? I'm the same way. If I make a mistake, I never blame it on myself. I always blame it on my kids or my wife, right? Okay. Right. I'm absolutely perfect, like all of you, right? We're all perfect and we never make mistakes. I think it's vitally important to when setting stop loss and take profit levels to actually set them appropriate to the volatility that we expect in the markets when you're actually trading. So let me show you what I mean. So if you actually open up the AutoChartist platform and you click on the volatility analysis section, and I think this feature is available for all brokers that provide AutoChartist to their customers. Click on the volatility analysis section. You get 3 graphs in the section on the right. I'm actually going to skip to the middle graph over here, which is called movement per hour, right? So it's actually movement per hour of the day. So if you notice on the bottom axis is the hour of the day, from 0 midnight through to 2300 hours, right? And I'm in Chicago. I've set my time zone to America, Chicago, because I'm in Austin, Texas. So that's central time for me. You can obviously change this to any time zone you're in. And on the right, on the y-axis, you have the price movement range. Okay, so what we can see is that at 7 a.m. Chicago time, which is 8 a.m. New York, euro dollar, right? I've just made that slightly bigger. Hope everyone can see this. Yeah, euro dollar trades on average around 35 pips in an hour. That's the green region. Right? The green region is actually the average movement, and then the dark green region, right? Then the light green region is actually one standard deviation. Now, for those of you who don't speak statistics, one standard deviation means a 68% probability. Okay, so there's a 68% chance that Euro USD will trade between, it looks like, about 22 pips and 47 pips at 7 a.m. at Chicago time or 8 a.m. New York time. Okay, so what is one guess to, for anybody for this question, right? What if you decide for some arbitrary reason to set your stop, to use a 10 pip stop loss level during 8 a.m. New York time? Right? How long do you think you're going to be in a trade? Okay, I'll give you one guess, all right? Because the answer is you're going to be out of that trade literally within a minute or two. And then I'm going to hear your complaint at the Financial Commission, and because you're going to think that the broker chased your stop loss. The truth is that using a 10 pip stop loss, or even a take profit for that matter, during 8 a.m. New York time for Euro USD is just not the right thing to do, because by doing that, you're essentially saying to yourself, I am not making a forecast based on fundamentals, technicals, whatever. I am trading noise, because that's all you're doing is trading noise if you set your stop loss inappropriately. Right? If you set your stop loss at 8 a.m. to be 35 pips, right? There is about a 10% likelihood or 20% likelihood that you'll hang on to your trade for an hour. If you set it for between 25 pips and 45 or almost 50 pips, you have a 68% chance of holding your position for more than an hour. So let's think about what I'm saying to you here, right? If you're trading Euro USD and you're trading a one hourly chart, right? A 1 hour chart, okay? If you set your stop loss or take profit 45 pips out, right? Or between 25 and 45 pips out from where you currently open the position on a 1 hourly chart, your trade will survive for one more candle, literally, or for one more bar or candle, whatever you want to call it. Now, if you're trying to play a trend, if you're playing, if you're trading a breakout strategy on 1 hour candles, then it's useless setting your stop loss and take profit to those levels, because then what you're doing is you're saying, well, I'm tossing a coin up in the air and hoping that in the next hour it's going to go in the same direction as I am. Okay, so Andrew, you asking, I've just glimpsed at the questions. You asked what is the time zone for the hour of the day. If you notice, let me just erase all my drawing objects. If you notice, I have set on the top right of my auto charter screen, I have got my time zone set to America, Chicago. Right? You can set your, because obviously I live in central time zone in the US in Texas. So if you can set your time zone to whatever time zone you're in, Andrew. So I'm not sure what time zone you're in. If you're in London, set it to Europe, London. If you're in New York, set it to America, New York. If you're in Tokyo, set it to Japan, Tokyo. So that's the answer. You're Andrew, you're in the UK. Okay, so set it to Europe, London. But so I'm talking in terms of America, Chicago here. Okay, so once again, if you're, let me just zoom in here quickly again. If you're trading, 1 hourly candles, then and you want to hold your position for a few candles, because let's say you're playing the trend, then you should be setting your stop losses and take profits, way more than, 45 pips or 50 pips, 60, 70 pips away. Otherwise, you're going to get knocked out within, literally within less than an hour. Okay, and so now this is very, very important, because different people have different ways of trading, right? Some of you are trading 1 hourly charts, some of you are trading 2 hourly charts, some of you are trading, daily charts. We can't dictate to you what to trade, but certainly, well, anyway, maybe I shouldn't impose my own views, but certainly when I trade and I'm looking at a chart, and I'm looking at a certain level that I want to hit, I kind of have an idea of how many candles it's going to take to get there. I mean, you can do it simply by looking at a chart, right? I mean, let's actually take this example right now with a trading screen behind me here. Let's switch to my MetaTrader quickly. Man, so if I'm, if I want to, hit a certain level, let's say over here, right? I know that this is going to take me like a few candles to hit. Okay, I mean, right? It's not one candle, right? So you kind of have a visual understanding as a human being of where you actually are expecting to, how long you expect to be in the trade for. And so with regards to that, you need to actually keep in mind, where to set your exit levels. And I'm not talking only about stop losses. I find myself saying a lot about stop losses because that just comes to mind first in mind. But it's applicable to take profits as well, right? If you set an inappropriate take profit level, you're essentially saying I'm taking profit on noise, not because it's always nice to take. Sorry, it's always nice to take profit, right? No matter what way, whichever mechanism you do it. But you're really lying to yourself. If you're using a 10 pip stop loss or take profit on euro dollar at 7 a.m. Chicago time or 8 a.m. New York time, and it hits your take profit and you made some money, can you call yourself a good trader or good? Did you make a good forecast? No, you were just lucky. You flipped a coin and you were lucky. And that's not the right way of building a trading strategy or a trading profile for yourself. In a similar light, if we look at the other end of the spectrum for EURUSD, if we're looking at the non-volatile times of day, right? So if you're in Chicago like me, US Central Time, that's kind of between 2 p.m. all the way. In fact, it's even before 2 p.m., kind of from the afternoon on, from early afternoon on, all the way to 1 a.m., I'm seeing no volatility on euro dollar. Does this mean that I shouldn't be trading it? Not necessarily. Right? What you find during non-volatile times is the market is either trending, right, or it's moving sideways, but it's not. It's doing very little up and down movement, right? So it potentially, that time of day is a good time to accumulate certain positions, right? If you're thinking, let's say for the next 2 days, euro dollar is going to be moving upwards, right? Euro, let's say, you think is going to get stronger. It's potentially a good time of day to start accumulating position on euro USD on the dips, so that your average trade size, your average open position is an average of a number of hours of trade rather than one specific moment in time. Furthermore, if you're risk averse, right? If you don't want the volatility, if you don't want the noise, then you could trade the non-volatile times of day. But certainly, if you're a person that chases volatility and you want big movements, and I hate to say it, but you're greedy, then you should be looking at the volatile times of day. But of course, this is why we're having this conversation, to make sure that you set the appropriate levels. So let's before we actually move on to the trading screen, let's actually look at another instrument. I'm just going to open up the Forex section on this side. Now let's look at a different instrument. This is obviously a cross rate. This is not against the US dollar. This is Swiss franc against Japanese yen. And you can see what the difference is in the profile between something like this and the euro dollar chart that I showed you a second ago. We're seeing on this chart, Swiss franc, Japanese yen, we're seeing steady volatility for a long period of time, right? And then a little bit of lack of volatility, right? But even then, the difference in the averages are not that big. So, you know, you have different types of profiles is what I'm trying to show you here. Just because euro dollar trades in one way doesn't mean that all the other pairs trade in that way, right? Let's look at I want to look at US dollar, Japanese yen. Now, do you all remember how the euro dollar profile looked like? Right, euro dollar was heavy volatility from about 2 a.m. That is where euro dollar traded. But now if you look at US dollar, Japanese yen, we're seeing volatility when the US market opens, and we're seeing volatility a little bit over here and a little bit over here, right? So there's more, you know, there's 3 batches of volatility during the 24-hour day. Okay, so again, I want to reiterate that it's not one fits all. You need to figure out what you're trading, right? What you're trading and what time of day you're trading. Because if you don't do that, your exit strategies are just not going to work, all right? So again, what I need you to do, all of you, is I need you to be even as extreme as saying, okay, these are the 3 or 4 currency pairs that I trade, or the instruments that I trade. You could be trading indices or whatever it is. Find them in your volatility analysis section, and if you want, actually go ahead and make printouts of these volatility graphs, right? So that you know what stop loss and take profits to set during different times of day, so you don't have to keep referencing it, right? So it's extremely important. Now, what I want to show you now is a graph which is slightly higher up on the volatility analysis screen. Okay, so whereas before I showed you the kind of expected price range movement for every hour of the day in pips, this graph over here is what we call the trumpet at Auto Charters, for obvious reasons. It looks like a trumpet. What the trumpet does for you is it actually tells you from the current point in time, right? So I have it at 8:15 a.m. Chicago time. Where do we expect US dollar, Japanese yen to be for the next 15 minutes, 30 minutes, hour, 4 hours, and 24 hours, right? So again, where do we expect it to be? I say that loosely, right? This is non-directional, okay? So what we're saying here is, for the next hour, we expect US dollar, Japanese yen to trade between 119.22 and 119.71, right? For the next 4 hours, we expect it to trade between 119.10 and 119.85. Okay, so and for the next 24 hours, between 118.58 and 120.36. Right. So what we're doing is we're actually taking the volatility and we're actually mapping it forward, to give you an approximate volatility range within a 68% probability, of where it's going to be within that certain time period. Right? Okay, so let's actually. Andrew, I saw another question from Andrew. Oh, another question from Kevin. Kevin, do we have a version for Mac? Kevin, this is a web-based version. So it works on Windows, it works on Mac, it works on Linux. It just in the internet browser. If you have some technical difficulties of getting in, just drop us an email to support@autocharters.com, and we'll be able to help you out with that. Andrew, we update the volatility charts. Well, actually, there's 2 different update mechanisms. So these volatility charts per hour of day, these are updated weekly, the trumpet that I showed you now is updated every 15 minutes. So it's constantly updated throughout the trading day. All right. So I'm already 22 minutes into our presentation. What I'm going to do actually is I'm going to just switch to my MetaTrader screen, so I can actually show you what that looks like in MetaTrader, right? So if you don't use MetaTrader, if you use any other trading platform, you might not get these lines directly on the screen. Now you can see I have these lines that say next 60 minutes, next 240 minutes, next 1440 minutes, right? So this is because we have a MetaTrader plugin, but if you don't have MetaTrader, you can certainly draw the lines manually. So this is a graph on euro dollar. This is a euro dollar 1 hour chart. So AutoChartist shows you the expected volatility from 1 hour and greater, right? So for the next 60 minutes, this is where we think the top level is going to be the top upper bound and the lower bound for the next hour. And then we have the next level for the next 4 hours. We think it's going to be between these two lines over here. Okay. Now, people ask me, Ilan, can I blindly set my stop losses and take profits based on these levels? So my answer is no, never do that. Okay. But I want to show you something which is very interesting. Now, if you notice where these lines are, right, notice how they actually, they're not always, but very commonly fall on very important support and resistance levels. If you look back at the 60-minute level over here, look at this point over here, consolidation here, consolidation, 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 right? All across the screen, a little bit of consolidation here, but a lot of up-down movement in between, right? So it seems, for some obscure reason, that this 113.16 level seems to be, interesting for people, right? So it, that's an interesting level. Certainly, it needs to be looked at. Even more than that, if you look at the 4-hourly graph, right, or the 4-hourly upper and lower bound for the volatility, again, you see consolidation at this level. Less over here, but you see another touching point over here. You see another touching point over here, consolidation over here. So these volatility levels are more than just arbitrary statistical numbers. In a lot of cases, you actually see them being really meaningful from an actual dynamic of the actual instrument itself. Let me erase these drawing objects, and let me open up USD JPY, because that's the other example we actually looked at. Let me zoom out a little bit. Okay, so I hope you all can see that. Okay, sorry about that. I was just distracted for a moment. So now you can see that for US dollar, Japanese yen, AutoChartist provides us some levels. So now let's look at some of the significance of some of those. We can see that the upper bound for the 24-hour volatility was actually a level that was hit previously, almost 24 hours ago, a significant level. Certainly the lower bound is significant. You can see significant consolidation at that level. The 6-hourly, the hourly, the 6 hours, 60 minutes, right? The 6-hourly also significant. You can see there's some kind of support happening there, right? So it's important to understand and to actually look at these things visually to see what they actually mean, right? Not to actually just, trade them blindly, right? So if I had to take a short position now on US dollar Japanese yen, yes, there's a strong likelihood that I would, set my take profit to be at 119.21, right? And my stop loss to be maybe even around the 119.83 level, because I see that was actually an interesting level of consolidation for me. You can see that over here, and you can see that over here. Okay, so again, take the information that we give on AutoChartist, and actually then, look at it visually and decide how meaningful are these different levels for your trades. Okay, and with that, I'm almost on 30 minutes, and I wanna finish off with that, and I wanna open the floor to questions. Errol, I saw 1 or 2 questions coming through, and I see just a few more. Maybe I can handle some of the questions without you prompting me. Kevin was actually asking whether we have AutoChartist for Mac. The AutoChartist signals within MetaTrader are not available for Mac at the moment. We are rewriting our indicators to not use DLLs. It's like a Windows-only function. We're rewriting them to, so that they will be multi-platform, but right now they're not. Right now they're on Windows only. So unfortunately, you have to look at your AutoChartist on your web page, and then kind of draw the lines manually on your MetaTrader on your Mac. Similarly for any other platforms, like we have integration with numerous other platforms. So check with your provider of your platform whether we have integration with AutoChartist or not. Okay, Andre, I am not entirely understanding your question. Let me try and answer it. So Andre is asking, how do you integrate the next 60 minute, 240 minute, which is 4 hour, and 1440 minute, which is 1 day, lines into MT4? So let me go back to the EURUSD example I had now. I'm going to erase some of my levels that I've drawn on here. You can see, Andre, that maybe you're asking just from a mechanism perspective. So sorry. So on the left-hand side in your navigator window in MetaTrader, there's actually something called AutoChartist volatility. You just drag and drop that in there. Let me actually show you that. There's a volatility indicator. I delete that. If I take that AutoChartist volatility indicator and I drag it, drop it on there, and I'll make sure I allow DLLs, and I push OK, then if we just give it a moment, it says requesting, and there it is. Then the volatility numbers will come up, and they'll update consistently if you keep that indicator on there. Okay. So Mike is asking, do you find levels give more reliable support resistance levels more consistently occurring with a higher time or lower time frame forecasts? Yeah, it's a $1 million question, Mike, right? Okay, so you're asking me when are the signals better? Is that what you're asking me, Mike? Mike, obviously we provide our services. I'll give you a political answer, a politically correct answer. We provide our services to many regulated brokers. So unfortunately, we cannot prescribe to you when is the best time to trade. However, certainly our empirical evidence and statistics show that the chart pattern theory that states that the higher time intervals are more indicative of market psychology, that is certainly true and has some merit. So you can read into that whatever you want, but it's not AutoChartist saying it. It's basically market theory, Dow theory, or theory of chart patterns and support and resistance that have that notion of longer time frames being more effective. Andrew is asking, how do the volatility levels match up to pivot points? Andrew, pivot points are, well, I don't want to say meaningless, but they're not a statistically derived measure. Okay, pivot points are based on the highs and lows of the previous day or the previous candle. So it's not a statistically derived thing. The volatility we give is statistically derived. That means we look back over 6 months over, the 1 hour candles at 8:30 a.m. New York time, and we average those out and come up with an expected volatility for that time of day. Pivot points have nothing to do with that. Pivot points are literally just based on the highs and lows of the previous day. So they're not a statistically rigorous way of identifying support and resistance in the market. I hope that makes it clear. If not, just please ask another question and I'll try and clarify that again. Do order charts volatility signs work for USD TRY? Well, that's a great question. Do we cover USD TRY? Let's actually have a look-see. I don't trade USD TRY. Let's see if we have that. No, it doesn't look like it. Certainly not in my demo application. Maybe depending on your broker, maybe it's in your broker's platform, but certainly it's not in mine. Oh, Monica. Right, Monica has shouted at me in capital letters. In my auto chartist, it's called power statistics, not volatility. Okay, so yes, that was actually Monica. Thank you for that. That was the previous version. It's the same product. We used to call it power stats. Now we've turned it into volatility analysis because people thought when we called it power stats that we were in the business of selling electricity power. So we decided to change the name and call it volatility analysis, but it is the same product. Monica, if you could let me know where you're getting your product through, and I'll make sure that broker changes his MetaTrader, his auto charters to call it volatility analysis instead of power stats. Okay, I am 5 minutes over my limit. I want to thank all of you for attending today. I really appreciate your time. I hope you found this useful, and I don't want to see any of these names ever in any disputes with their brokers for incorrect stop loss execution. I hope to see you soon against next time, where I think we're going to try and do another very specific strategy-oriented presentation again. The recording will be available, I'm sure.